6 days program. So today is the RBI review. So this is one of the critical day because when there is a RBI review or any kind of domestic financial changes happens, so that time the market used to behave in a different way. So we'll be testing our methods in this particular day. So that will be a very good opportunity for all of us to test these methods, whether these calculations works in this kind of days or not. So that we'll be testing today. For that reason only, I have scheduled this program today. So today we'll be starting. So to again Monday we have 8th, Monday, Friday. By this process till 29th, this program will go on and all the sessions will be in English. There is no Hindi sessions scheduled for this month. So this long program is being scheduled for two reasons. Number one, we are going to test one option strategy, the calendar option strategy. So this strategy will be initiating today. So we will be having the entire month till August 29th. So today we are in the 5th of August. So 5th of August we will record those trades. On 29th, how it has performed, we will be testing that. So that will be the first benefit of having this long program. And second, the monthly top and bottom whatever will be visible today. So we will be testing those things by till 29th. We will be seeing the grand trend reversal date calculations. That also for the entire month it will be there. So we will have ample time to test it. So for all these calculations what we are doing, so this is not a single day calculation, rather it requires some time to mature. So we will have the time to testify, to know, to validate whether these methods really work or not. So for that, this long schedule is being made. So 5th to 29th, and it is not occupying your entire time on Monday and Friday. So half an hour time we have scheduled. So today I will be taking certain things and some of my staffs, they will explain about the softwares, how the software works and all. And gradually we will progress to the analytic domain. And here, none of those calculations I am going to explain. So these are calculations on gann trend reversal date, calculations on the one standard deviations, none of the or calculations on the intraday top and bottom or monthly top and bottom. So these calculations are already given in our website. So in my YouTube channel, plenty of videos are being given mathematically how you can calculate those things. So those things will not be taken, only how we can utilize it, how we can use this thing in the real market, that we can do. So I will not be using the Excels because the Excels in those theoretical sessions I have conducted, in those sessions I have already provided you the Excel. So in this session, I will be demonstrating all the concept with the help of our software. So this is how the sessions will happen from the 5th August to 29th August. So I request all of you, do not miss any of this session. Really, if you want to witness some of the valid techniques in the market which really works, if you have a strong intention to learn some of the mathematical concepts which really works in the market and market obliges those concepts, then do not miss any of this session. So attend all the sessions, and here once again I will tell you the monthly top and bottom option strategy, whatever we are going to form today, so that we are going to witness till the end of month how it has worked. So that is the reason for which these long sessions are being scheduled. And you can.
I'm going to explain you about the advanced option strategy testing tool, where you can form your strategy and then you can test it where it has been performed in earlier months, how it has been given you the performance. So yeah, okay, we can just get into an example where you're going to form for 22nd. We can form for June month, where we're going to taking as from date, and then the due date will be chosen. Okay, you can enter the lot size.
After Nifty.
Yeah, this is for Nifty testing. So you can just load the data. After the data loading, you can form your own strategy here. Okay, we're going to form a calendar spread strategy. For this calendar spread strategy, Sam will be explaining about it in later classes webinars. Okay, we just format to somewhere around 17,000. Okay, and then we're going to sell it for one lot.
This was June experiment.
Okay, the same zone. Okay, July, July call same 17,000. Buy 17,000 buy one lot, and same way here we're going to buy same June expiry call. We're going to take slightly higher, which means 17,500 strike. We're going to take same way. It's going to be buy one lot, and also next we're going to take about the second expiry. It will be also a call. Same 17,500 strike. We're going to select it. We're going to still this one. Yeah, okay. After all these details we have been entered, right? Whatever the strike, premium, all those things you can view here. After that, just calculate the profit and loss here. You can view the profit and loss, whatever it has been showing here, right? For the first two, for somehow 6 to 7 days, it has been given a little bit of profits. After that, it has been giving losses only. So if you have been maintained this in real world rate, it will be lead to a loss. So before that, we can test it in a backward, which means in yearly month how it has been performed. Okay, so let me test it. Yeah, okay, I will just choosing for 2022, which means the May month I have been choosing. For the same strategy, it should be cloned and given you a same strike regarding the calculation, which will be taken care of system. Okay, we can just click on the clone strategy. Okay, after this cloning, you can just see here the spot which has been changed. You can just clearly see here where, which means it has been taken the spot from May month. First we have been that from date, and then the strikes, all those things has been selected for May month regarding expiry. So now we can just calculate the profit and loss for this one and find out how it has been performed in May month. Okay. While we have been choosing for May month, it has been giving you full of losses. So this is how you can choose and find out which is the best strategy you can implement in real time trade.
So normally it does two works. One is for testing the strategy, another is to test in the earlier month how these strategies are performed. So this is what the tool does. So there are specific technicality to this particular calendar strategy that I am going to discuss in this session. So the session is being scheduled, and that is also a topic of this particular program, that how we can choose a calendar spread strategy, and every month how we can form the calendar spread strategy. So this is what we will be learning. So now to quickly to move on, because market has opened and market as 9:33 time. Today is the RBI date or RBI rate decision date. So today is the best time to test this strategy, because we best time to test our calculations, not the strategy. Strategy, it will be a long month, it will go on. So I'll be going to our analytic tool for the Nifty analysis, and couple of those who are using this Smart IT integrated tool, they will be knowing. So all segments we have given: equity, stock future, index future. So I am going to the index future, Nifty and Bank Nifty, both we will be doing. So here 25th August, the expiry. So you can go for the September also. The 25th August, current month expiry. I'll be loading the data. So here you will be getting the two options, intraday or positional. So today is the RBI date. We are going to do intraday trade on Nifty, and that too also Nifty future. And this is, you can see that calculation is done. And if you go down here, now we are in the growth trend. So my first topic for this program was how to do intraday trade in 1HD with the option hedge. So this is what we are experiencing now. So this is the analysis we did, and today is a critical day. You can say 17,470 it is trading now, Nifty future. So we did analysis here. So it is telling we are perfectly into the buying range, 17,456 to 76. So this range we are now. So we are into this range, so we can perfectly buy Nifty. So I have scheduled that how we can hedge this trade. So if you are buying the Nifty now at in this range 17,456 to 17,456 to 476, in this range, if you are going to buy the Nifty, try to hedge it with 17,500 put option purchase. So here the simplest hedging technique will be buy a put option of 17,500 put along with buy the future. So this is what the simplest technique. And once the critical zone is 509, 17,509 to 533, and growth cluster, this is the most important or hardest resistance for the day. If this crossover happens, then you can get the higher levels. So to record the trade, so you can say that buy the Nifty future along with the 17,500 put option purchase. So this is the simplest hedging technique. So this will reduce your margin and other things, that benefits you can able to see in your broker's terminal. But as far as this one standard deviation calculations are concerned, so this is what the trade is. So I also go to the intraday top and bottom. So this is saying that intraday top and bottom, this is the tops can be formed in intraday. So if the uptrend continues, very carefully listen to this part. If the uptrend continues, then Nifty will find a top today. First cycle top will be 17,617. If post RBI review or anything bad happens, market adversely react, then the bottom, intraday bottom for the day is placed at 17,158. So these two, the bottoms and tops, is being valid for the day. Then you must ask me, what is the use of this 3rd to 17th cycle? So certain times market behaves very wildly. The volatility will be very high. Market used to go into a very gap actions, 300, 500 point up or down. On those situations, we can use these tops. Once this top is crossover happens, 17,617. The next top will be 17,785. Next will be 17,901. So these are the possibility for the day if there is a huge volatility is there. Since we are not experiencing any such volatility for time being, the top is being placed for the day 17,617 and 17,158. You must ask me how I am going to take benefit out of this. What way it is going to give me the benefit. So here two studies you got. One is the one standard deviation study, which is telling you to buy the Nifty along with a hedge. Another is intraday top and bottom. So these two different studies are being in front of your eyes. Definitely many new traders will get confused about that. So the first, these are the trading levels. That is nothing to do with the top and bottom. Top and bottoms are the extreme prices we can experience today. So what is a top? It is the extreme price or extreme high we can experience for the day. What is a bottom? It is the extreme price we can experience in the downside for today. So whereas the trading levels are different. So trading levels is at the between this top and bottom, we have calculated multiple levels. Based on the trend breakout, we will be entering. So this is colored is highlighted. So the trading level says that now 68, 70, these levels we are trading. So these trading levels say that we are very much into the buying territory. So we'll be buying the Nifty future. Along with that, we'll be hedging it with the 17,500 put option purchase, and we'll be waiting for this breakout to happen. So here you can say once this 533 breakout happened, because I am going to again to take you to intraday top and bottom, how it is beneficial for me. So many people hurriedly they will book the profit here 509, or they will be book the profit here 533. They will say that the day has ended for them. However, if the 533 breakout happened, then the price has all strength, or the trend is having all strength to touch this 17,617. So this is only a hurdle point 509 to 533. If it happens, if these hurdles are being crossed over, then wait for the maximum target to achieve. That is your 17,617. So 2 points I am mentioning and again repeating, it is in the buy trend. We are buying the Nifty future along with 17,500 put option purchase. So the first hurdle point will be 17,509 to 533, and once this crossover of 533 happens, we'll be ultimately waiting for the 17,617, which is the intraday top for the day. So once this total crossover happens, you can say that this first cycle over, then we'll go to second cycle, then we'll go to third cycle. That is depend upon the trend strength. But at present, based on the current price, current situation, this is the decision process we should have. Buying Nifty with hedging with 17,500 put option and waiting for this 509, 17,509 and 17,533 to have a crossover. If this crossover happens, we will be achieving 17,617. You must ask me where will be my stop loss. So once this trade I initiate, where will be my stop loss? Because I have hedged. So once I am hedged, so I have a proper stop loss mechanism. So your stop loss will be 17,369 because your trade is hedged. It is hedged with one option. So what one should do if the stop loss is achieving? Suppose you bought it, now it is a perfectly trend is in uptrend. You bought it, something adverse happened, a trend turned to be negative. Because we have bought, that doesn't mean that market will obey it. It is nowhere it is guaranteed that yes, you bought, so we will give you the success in the buying trade. So once you bought it and the market has reversed, so your stop loss got triggered here. So what you need to do, you have to book the loss in the future. Future, you have to book the loss. The option hedge, 17,500 put option what you have taken, in that you have to book the profit. So both your trades will be closed and you will take a part of loss. So here, if you can say future is giving to near to 150 point or 100 and odd points lost. So options will be recovering 80 to 70 to 80 points, 30-40 point loss you have to net basis you have to take. So once this trade you are closing, here you have to do a swing trade, you have to sell the Nifty future here, and 369 is there. So here too also you have to hedge it with 17,400 call option purchase. So this is the simplest trading technique, simplest hedging technique. Don't think that there is no other techniques beyond this. There are many techniques are there. You can write some options if you are advanced traders and all. So you can think of these options. You must ask me whether I should trade or hedge it with the weekly options or in the monthly options. So I will suggest hedge it with the monthly options. Weekly options are having higher theta factors and there are some grade of miscalculations present in the weekly options. So avoid weekly options and hedge it with the monthly options. So this is how we should be trading in the Nifty today. Why we are conducting today the session? Today is the RBI review day. It is a critical day. So today, whether our calculations are working or not, to know that, this is the best opportunity to test these tools. So today is a critical day. So we came in front of the public to show or demonstrate, to testify. Whatever definition you want to do, you can give. So to testify our tool, we are in front of you. So this is the Bank Nifty also is in the buying trend. So same process you can follow. And what is the intraday top and bottom? So I am not going for monthly top and bottom today. Intraday top and bottom. This is the intraday top and bottom. 38,187, 37,355. So this is only valid for the day. Then again I will be repeating what is the use of this third, fifth, 17th cycle. This is only for extreme volatility day. So extreme volatility day. So extreme volatility day we can utilize this. So here I am showing it has many tools here. One standard deviation, natural constant, volatility, Fibonacci, lot of tools it has. However, as per our program decorum, we are just intraday using 1SD and option hedge. This is what we have scheduled. So we'll be focusing only one thing. So you can follow any one tool. You cannot follow all, but any one tool you can able to follow. So this particular now Bank Nifty is in the range of 37,914 to 37,954. This is the range now Bank Nifty is trading. So what is the intraday top for the day? If the uptrend gives you a breakout, the first cycle 38,187 it can hit, or downtrend 37,355. And one very important thing you have to remember here. Once this uptrend cycle 1 breakout given by any stock or any indices, very carefully listen to this. This calculation is so powerful. Any day you find out the first cycle uptrend breakout happens, the complete volatility scenario will change, and that particular day stock can touch the 5th or the 7th cycle. Any day if it happens and you found out the first cycle top or the bottom has given a breakout, then particular day the third cycle you can ignore. 5th or 7th cycle price is a possibility, is a probability. So this is also a very important thing you need to understand. And here too also Bank Nifty we are telling the entry should made at 0.382 level, which is 37,954. We have made it here. We have given Bank Nifty is the denomination is very high. It's a very big number, 37,914, huge number, and its grade of volatility also high. So for that, always Bank Nifty you enter at 37,954. If you are buying here, then you must hedge it with 38,000 put purchase. Nearest slightly in the money, put purchase, put buy, and that should be monthly put, not weekly put. And you can follow any other things also. If you don't want to buy the options, you can sell some options also. You can sell 39,000 call option also instead of buying the 38,000 put. So that is also a valid hedging technique for the intraday. So the simplest will be wherever you are buying the future, the nearest in the money ITM option, which is 38,000 put you can purchase, and once the stop loss triggers here 37,745, close the trade, reverse the trade in the opposite direction. Why this software doesn't give an alert? We can create that whispering software which can speak in your ear. But why? The reason is these calculations are different for different users. Slightly different. Reason, it uses the real-time volatility. Real-time volatility at 10 o'clock will be different. At 10:30 it will be different. At 10:45 it will be different. So levels are different for every user. So whenever you calculate the specific result, you follow to that. You must be thinking that if I have calculated, this calculation is gone, from where I can retrieve it. We have given the options here also. Check your previous analysis. You click it here. You log into the web interface. Search what are the trades you have done for the day or analyses you have done for the day. So it has, I have done 2 analysis, Nifty and Bank Nifty. You can retrieve your analysis. So here 1SD trends. These are the analysis we did, and explanations also is being given along with the hedges. So all your analysis you can able to retrieve. So these are more mathematical in nature and they are more calculation oriented, and it has some real calculations. It doesn't give a static level for it. I have started the event at 9:30, so I am doing the calculation at 9:30. It doesn't mean that every day you should do the calculation at 9:30. You can start it at 9:20. Just 5 minutes you give, some data should be created in the system. So system should take a call, and based on that, it will initiate the levels or calculate the levels.
Good morning, everyone. This is Gautam from Smart Finance. Now we are going to check a gann trend reversal date using our gann desktop software. First, we have to select the symbol, and reference we have to select whether it is the previous month or trailing month, and just we have to load the data. Data load is successfully. Now we have a trend reversal date for August and September month. This is first default tab will be low angle, which is having the high accuracy than other angles. And August month we have trend reversal dates for Nifty 9th August and 24th August and 27th August. 27th falls on Saturday. It may be occur on Friday or Monday. 26 or 28, 29 it will happen. And we have high angle, which is also
15th and 20th.
Which is also 15 and 20. 20 also falls on Saturday.
So here what he has told that there are once you load the informations, these calculations will be already given to you. So the Excel sheet in the last session what I have given to you, that has low angle and high angle calculations. The same thing software does here, but software has some efficiency in the terms of the data error. Sometimes if you wrongly put the high formation day, load formation day, the calculations will be wrong. So here software has that accuracy. So here many methods we have given: low angle, high angle, static angle, gann angle, and a new methods also we are adding. So hexagon also we have added, price time also we have added, price range also we have added. These three methods is got added last month. In the July we have added this. So these trend reversal dates are being categorized into two groups. Very carefully listen to this. Those who are user of the software. Those who are user of the software, very carefully listen to this. The trend reversal dates grouped into two segments. One is the major trend change. Major trend change is on that day a new high or a new low or any kind of major event should start. So today it is a 9th, it is coming as a, so 9th is a holiday, you can say 9th is a holiday. So 8th or 5th it will be the trend reversal will happen. Previous working day, sorry, 8th or 10th, the trend reversal can happen. 9th is some holiday, festive holiday in India. So here what happens, on this day some trend actions is going to change. So it is a major trend reversal day. Some major event is going to happen, major price oscillation is to happen, volatility will increase on that day. Many definitions you can give. But when you go to the gann angle, it gives many days. You can see 9, 10, 11, 2, 23, 26, all these things are coming. So here we have mentioned it is a minor trend change date. Means on that day, the consolidation can happen, small price correction can happen, or volatility will sink. So you must ask me why these two groups. So on the minor trend change date, what I should do? On major trend change date, what I should do? Minor trend change date, I told that small price correction consolidation can happen. So these are the dates very good for the option sellers. Those who are selling the options, they can take the best benefit on the minor trend change date. So those who are using the major trend change date, some new things is going to happen, volatility is wide and all. So the entry process is also different. Suppose there is a 9th, there is a trend change date, or 24th is a trend change date. What I should do on this day? So on this day, what I should do to take the benefit of this trend change date? So I have given a presentation to all of you in this handout section. Please download that presentation. That step by step I have written what action you should take on that day. So there is a trend change date I have seen. So many of you used to tell that yes, I have seen this trend change date. It is working fine, very good. So all things is good. We are getting lot of claps for that. But very few traders used to take benefit out of that. So if I ask you, there is a trend change date happening on 24th, what you should do? How it is going to beneficial for you? How it is going to benefit you in your trade? How you are going to make money out of this? So what action you should take? So here 23rd your action date, not on 24th. 24th, the trend change can happen in the morning hour or it can happen in the closing hour. Morning, as soon as market opens, that trend change will happen. So you have no time for that. So 23rd, 3 o'clock to 3:30. 3 o'clock to 3:30 or 3:15 to 3:30. So this period you will be knowing whether the Nifty is going to close negative or positive. Negative or positive. If 23rd it is closing negative, on 24th it will open positive with a gap or it will be closing positive with a certain gap or positive gap. Opening gap should be there or closing gap should be there. So 23rd, you should initiate the Nifty based on its closing parameter. So no pricing analysis is required here. So negative closing happening, you buy the Nifty and same process as I explained in the one standard deviation concept, hedge it with one put option purchase. So this is a overnight position, you have to hedge. There is no other way. Hedging should be done. So on 24th, once it open positive, you should close the trade. So here pricing analysis you are not doing. You do not know what scale or magnitude it will go. If there is a gap, take the benefit, come out. So this has a no scope for the pricing analysis. So whenever we will see the gap, we will just come out. If there is no opening gap, we will be waiting for, and once this is closing basis it is happening, we will be coming out. And what is the success rate of this method? If 10 trading days or 10 trend reversal dates are forecasted by the system, or 10 trading days are the trend reversal date, 6 to 7 trading days it will work. 2 to 3 days it will go for a failure. And this software has all other features. You can, if you do not want to do in the Nifty, you can just click on the trend reversal scanner. It will scan out all the stocks and tell you which are the trend reversal date tomorrow. So tomorrow is today we are in Friday. So tomorrow, Saturday, it's a holiday. So these stocks will be having the trend reversal today or it will happen on Monday. So the list of stocks having the trend reversal on a particular, on the very next day, you will get through this scanner. And besides that, we have many pricing tools. Square of 9 tool we have given, square of 12 tool we have given, gann angle volatility, midpoint, many tools we have given along with it. All are pure gann concepts, which is not being altered or modified. So this is the use of this particular gann angle tool. And the report what we are publishing regularly on the trend reversal dates, that is we are considering these two methods, low angle and high angle method. And this low angle and high angle method, Excel sheet already I have given earlier program. You can do in your manual calculations, but data you have to take care. If you are punching the data wrongly, it will give you wrong results. And that is your pure your domain only. So this I got it is very important. So any calculations you do, the close proximity, so far the high is being made 38,116. So this is the high made. So this was our target, and sixth target was this one 38,188. So till this point it has made, day has not ended, only 45 minutes of the trade has happened. So now bank nifty, so the calculations also here. So intraday top and bottom also is there. 38,187 is our top. If this top gives you a crossover, then third cycle you can ignore, fifth and seventh cycle also possibility. So this is the one of the evidence you got during the session. So this is the power of this calculation, or the calculations is obliged, respected by the market. So these are the mathematical calculations which are respected by the market. So it has no historical indicators inside it. Nothing history is here. So everything is being taken one standard deviation, along with that the real-time volatility estimate and Fibonacci ratio. Three things are being utilized here, or a fusion of three things is being made. Fibonacci ratio plus the real-time volatility plus the one standard deviation formula. So one standard deviation formula along with the volatility gives you the price range expected for the day, which is 274. Then this particular 274 price point is again testified or being utilized with the Fibonacci ratio to calculate these levels. So this is what the internal calculation of this method. So wait for the day to experience the intraday top and bottom. Recording will be given to you. However, if you want, take a photograph of this. So this is the intraday top and bottom. Once again, I will repeat. The current scenario, the top and bottom is 38,187, 37,355. If this crossover happens, then fifth cycle and seventh cycle also are the possibility for the day. So this is multiple times I am repeating the same thing so that you can give some more importance to that. So you have experienced the bank nifty, you have experienced the nifty. So those who are having the tool, they can do the calculations in many other scripts. So these two things we will be following for the day, and now I'll be moving to the option strategy which we can form. So option strategy, what we are going to form, calendar spread strategy, what we are going to form, and we will be going to follow up this strategy till the end of month. So here I have told you calendar spread strategy, how you should form and what is the logic behind that, and we should follow it. So it is a long program, 5th to 29th. So we will be forming the strategy now, means we can able to follow it off till the end. So what I am going to suggest here, we will be taking the combination of two things. One will be a debit calendar. So what is a debit calendar? That you need to learn from some theoretical book. So debit calendar, and I will be mixing it with one credit calendar. So the way in the Prem Kumar has explained you in that how you can test those calendar spreads. So these two strategies in combination we have to take, but one simple mathematical rule will follow along with this. Very simple rule. Suppose in the debit calendar we are paying 100 rupees, then in credit calendar 70%. So debit calendar means we have to pay. So 70% of this money we should get it from this credit calendar. Means 70 rupees credit we should get. So this combination will have two things. Debit calendar can happen in any strike, but once debit calendar you are forming, whatever money you are paying, 70% you can take out from the credit calendar. Why so? You must ask me, what is the logic? Why this 70% logic is holding good? So this 70% you are taking out because calendar spreads we aim from the theta decay. Theta is our profit contributor. So those who have taken Smart Finance, Futures and Option courses, either the live course or recorded course, I emphasize on these points. So you cannot able to do the very complex arithmetic of delta, theta and vega. So simple way you can try to implement these things in your strategy. So from where the profit will come? From theta. If you are forming a long straddle, long strangle, where the profit will come? From delta. If you are forming a box spread, from where the profit will come? From theta. So you should know which strategy, whenever you are forming a strategy, from which side the profit comes. So profit comes from the profit is being profit comes from the theta. So this is what we have concluded in the calendar spread has given the losses. So why is this loss happened? So here you can see that 271 we are paying, 138 almost we are receiving. So in this process 11 8 are 3. So here 6 3s are 3 and 1, 133. So you should get at least 70 plus 21 or 22 rupees. So we should get 92 rupees as a credit. 70% of this is nothing but 70% of the 133. So how much we got it here? So if I say 129 and 40, so how much we got it here? 129 and 49. So here here 84. So sorry, 89. 89 we got. So 2 to 3 rupees lacking. So that is acceptable. However, slightly we can revise this. So here 17,000 we have taken. So what we have to do? I'm just going slightly below because market is at 16,500. So I'm going to 16,700 and also going to 16,700. So here too I am buying here, this two I'll be selling. So I got 400 to 50, so 150 points, 150. So I required near to 105 rupees as a credit. So I am going for here too also I am just trailing it by 200 point down. So 200 point down. So these strategies are beneficial only in the 102 rupees we are getting here. So 102 we are getting here and 150 we are paying here. So I am just again marking it here, almost 150. Some paisa difference will be there because I am doing just a mental arithmetic. Some paisa difference will be there, so that you ignore. So here we are getting 102. So almost 70%. So we are paying this one and we are receiving this one. So in the call side we have done same process. You can repeat in the put side also. So here, or you can have call and put both also. So there is no restrictions here. So just do this and we'll be calculating this profit. So you can see that first few days, and these strategies also having specific rules. Till 15th we are in profit. Then we have entered the loss. Last few days we are entered to the profit. So this is what happened. This calendar spread implementation, one will be credit and another will be a debit. So first one will be a debit, or the nearest strikes will be having a debit, and the very next strikes will be having a credit. So debit and credit ratio will be, if debit is 100 rupees, then credit should be 70 rupees. 70% of debit we should take as a credit. This is the formation tree, and this particular strategy should not be hold till expiry. Most of the calendar spread strategies are being hold till expiry. These strategies will be hold only for a plus 200 point or a minus 200 point movement in the Nifty. Any movement you find out there is a plus 200 point movement happened in the Nifty, close it and move it to the next strikes. Any movement you are getting, there is a minus 200 point happens, just bring the strategy down with a little loss. So your modus operandi or your speculation arithmetic will be, each time there is a 200 point oscillation happens in this, you will be switching or closing this strategy and moving to the higher strike. So this logic, if you make it and test it for the May, so May month we have seen there is a, he has demonstrated there was small profits was coming for a couple of days, then there was entered to a loss. So here too you can see that first 5 till 11th we are in profit, then after we are slipping into the losses, and these are the expiry dates, so there are no expiry in the May, so these two figures you can ignore. But first 4-5 days we are into a great profit. 200 point movement happened. So as I said to you, 17,000 level it is being taken. So 16,600 level. Whenever 16,600 level, highest profit. You can see here 16,682.76. Exactly after 2 days it was a highest profit. Reduced. More than 200 point for profit reduced. So 200 point is a movement you have to make it or to test this, because that 200 point also has a logic. So here those who are interested, they can introspect on the theta part, they can introspect in the delta part to understand why that 200. So this is beyond the scope of this particular program. So this is a simple logic. So first for implementation, number one, the debit you can take very close strike also, 16,000, 17,000, sorry, 16,600 also you can take, 650 also you can debit strike. Whatever the debit you are giving, credit strike should happen 70%. Either you can take in call side or in put side, or you can take both. So I suggest any one you can take. So it will be very simple. So call side, if you are taking only two call, you can take. So it doesn't make any difference if our exit plans are perfect. What is our exit plan? Any plus 200 point movement will book profit. Any minus 200 point movement will book profit and come out. If there is no movement for 5 days, 200 point movement did not happen for 5 days, small profit will be there, then you can come out. If there is no 200 point plus or minus happened after you initiate the strategy for 5 consecutive days, come out from the strategy. This strategy is not suitable for that month. Considering that, you can come out from that. So if there is a gap happens 200 point, you can make it 200 point more, slightly profit will reduce. So here someone is asking that if there is a gap happens 200 point above, what I should do? So your profit is not going to be get sacrificed in that, because here we focus all our 100% attention in profit. So this 200 point is a hook point, or the logic is not that much material. So they, here there is a 200 point fall they have seen. So he has said if there is a gap down happen, what I can do? If there is a gap up happen, what I can do? So when the profit has already come down to here, so 300 point it has come down. Why didn't you book the profit? Why you are waiting for another 300 point gap down to happen? So there are many sentences are there to defend those arguments. But here, those who want to learn, take the benefit of this strategy. But because these are the speculative strategy, very quick you can make. Small money will come, but quickly it will come. Monthly, 3 to 4 times. At forming this strategy, how much margin is required? Can anyone will tell me? Those who are in the broking, can anyone will tell margin? 48,000 rupees you have invested in 200 point move, you are getting some 1,500 rupees, and if nowadays brokerages also is very low after 2 or 3 days, or in a single day if it comes, it's not a bad idea, it's not a bad money. You can keep, if 4 to 5 trades in a day, it's 4 to 5 trades you do with this logic, 48k can earn 9 to 10,000. So this is almost 25% you are getting. It's a great money. So 200-point movement anytime happens. So if there is a 1,000-point up or down happens in the market, many opportunities you get. Even though if you are getting 4 opportunities, it is good. Listen to my presentation carefully. What I said, plus or minus 200 points, you are going to make money. And tested now. So market is trading, or the Nifty is at 17,500. So come to this particular things. I'll be adding here. Those who wants to take the positions or paper trade, they can take it now. So Nifty, I am loading here 25th August, and we have understood the internals of this thing. Option index. I am going for the Nifty. So this particular, take a photo also once I add. So here, so we'll be going for 25th August. I'll be going for now. Nifty is at 17,477. So I am going to 17,700 call option. August I am adding here. I am adding 17,700, 17,900 call option, or 18,000 I can go. 18,000 call option I am adding here. I can change it also afterwards if I want. So September I am adding here. September month I am going for. September same strike. 17,700 strike call I am adding, and I am adding same 18,000 call September. So see the difference here. So difference here 17,700. So 375 we are buying here. This one is buying 375, and here we are selling 156. So 376, 375, 156. So here, or 155 if you can make 5550, 2 and 220. So this is giving me 220. 220, and how much I should get? 70%. If it doesn't come, then I will change it. So here September I am 239 and 64. So 220 means 70% I require. So 140 and 14, 154 I require, and I am getting here. So 40 less 200, 220 less 180 I am getting. So slightly I can increase here. 180 I am getting. So I am just removing this part. 18,000 strikes, 17,000 strikes are decided. Now we'll be going for slightly higher, 18,200 strikes, 167. We require 154, and August also I'll be going for 18,200. So 32. So here 141. So these two also need to be 10 rupees. I am 500 rupees I am missing, because my profit is only 1,500 to 2,000 rupees. So I cannot afford to give a 500 rupees here. So 18,100 will be the best, I think. August, and this also will be going for 29 September. Enough liquidity is there. So exactly 153 rupees is there. So this is the strategy you can lock. 18,000. So this particular script I am taking to the top. So this will be your, this also I am taking to the top. So your calendar spread we are forming this one. 17,700 call. August we are selling. September we are buying. 18,100 call option. August we are buying, and September we are selling. So this is the sell, this is buy. Again, the here I am going for. August I am selling, and September I am buying. So 17,700 again repeats. 17,700 debit calendar, 18,100 credit calendar. We are forming. We will be waiting for 200 plus or minus. Means I am telling you to book profit at 17,200 plus from here. So almost 500, 17,700 level book the profit, or 17,300 level, you should book the profit. So profit will be plus or minus 200 points. So this is the strategy we are locking in. So we have the sessions on Monday and other sessions will be following off that. Offers for Independence Day. So here we have Independence Day. We have created specific offer to get most of our products at a deep discounted price. So those who want all our softwares, I repeat, all our softwares, including option, gann, all the softwares, whatever you have seen, everything will come at a cost, including GST, 12,980. All our softwares, 1 year subscription. Post that, you will be paying a renewal of 4,000 plus. Second year onwards, 4,000 plus. If you want only 1SD and gann, it's a preliminary software to see the trend reversal dates, and to do specific intraday trades. So those intraday requirements it will fulfill. So that will cost you 7,080 for first year. Second year onwards, renewal will be 4,100 plus. Those who want all our courses, which is 6 different courses are there: gann, F&O, Fibonacci, Investor, Iliad. So here the courses explains the concepts in more scientific way. There is no vague literature here. We never give any literature which has no proof. We never promote any literature which has no market relevance. Such kind of literature you will never find in Smart Finance. So if you want all our software which we are now giving it on 12,980. So if you can add hardly another 9,000, you get all our 6 courses. So gann course almost 40 hours. This F&O course also 40 hours of videos. So these are the courses, Fibonacci, Iliad, and all 4-5 hours each. So based on your interest, you can get all learnings. You will get printed books written by me, and all those things you can get. All stuff you can get. So these are the offers for this particular Independence Day, and this offer link also I am just sending you in your chat box. You can access this. So here, so I am sending you all that offer link. If you are interested, you can take out any product out of it. August 17,700 call sell, September 17,700 call buy, debit calendar. August 18,100 call buy, September 18,100 call sell, credit calendar, which is meeting with the requirement of 70% credit received for the debit paid.